2 years ago this month, 5 stocks to put under the tree. We've talked about that. You know the game we're playing here. I say let's get right into it with stock number 1. These are alphabetical, just as I did on the podcast and as I did with our previous stock sampler. So what was up first alphabetically? We like to do it by company name. So let's kick it off with, Amazon. I picked it with that 5-stock sampler 2 years ago. It was at $770 a share. Today, as I mentioned already, it's at $16.04. So good news. That stock put under the tree, that made a wonderful gift, the gift that keeps on giving up 108%. Now, how's it doing against the stock market? Well, the stock market over the last 2 years, since that 12/7/2016 podcast, the stock market is up 16%. So with Amazon up 108 minus 16, that's a plus 92 in the win column. Let's go to stock number 2. Stock number 2, well, one of those companies that puts a lot of products underneath people's trees this time of year, and that's Apple. And Apple 2 years ago was at $111 a share. Today, it's at $167. By the way, I should mention, since it's kind of a theme this podcast, Apple was at $230 in October. So it's gone from $230 down to $167. I'm really happy to still say we're up 50%. And versus 16% for the market, that's a plus 34 in the win column for Apple. So 92 plus 34, we are up 126 percentage points over the market so far. And spoiler alert, it's about to get better. Stock number 3, Activision Blizzard, the video game and entertainment company. Another one of those companies whose gifts I appreciate receiving this time of year. Activision Blizzard 2 years ago was at 37.5. Today it's at 48. That's a 28% gain. That gives us a plus 12 in the win column. That brings us up to plus 126. Do I sound like a broken record, though? My golly, this stock was at 85 in October. It's dropped from 85 to 48 in 2 months. And yet we're still pretty happy with our longer-term returns beating the market. I know a lot of people say the market's going to get hit at some point, or 2019 is going to be a bad year after all these great years. Have we been looking at the last couple of months? I did say a few months ago on this podcast, I think we're already in a bear market. And a lot of times the pain really happens up front. And when I'm seeing companies like NVIDIA cut in half in 2 months, and Activision Blizzard nearly cut in half in 2 months, and Amazon and Apple all 20-30% down from their recent highs, I feel like we've already felt a lot of the pain. Things might get surprisingly better from here. We'll see in 2019. I think the market's going up. All right, stock number 4 is maybe a particularly interesting one because this company, it is often said, has had about as bad a year as any company, any big company could have. So stock number 4 that we put under the tree 2 years ago this month was Facebook. Facebook was at $118 a share that day. And today, it tips the scales at 146. It's up 24%. So we're 4 for 4 on the stocks we're putting under the tree. It's not been a great investment. It's up 24%. That's 8 percentage points ahead of the market. But, Facebook in July was at 218. We're printing our results here when it's at 146. So this is another company that has lost a huge amount of value. And yet I don't even think as much as you'd expect from the headlines that we read. Some people, it seems to me, are leaving Facebook nearly for dead at this point, thinking their problems run so deep, everything from questionable executive decisions right through to betraying the trust of their customers or security leaks. Bad decisions, bad outcomes and results. It certainly hasn't been a good time, and I know a lot of you are probably not very happy with Facebook right now. And as an investor, I'm not very happy with Facebook, dropping from 218 to 146 in just a few months. That said, doesn't it sound like a lot of the other companies we're talking about? So I don't think Facebook really deserves to be singled out in quite the way that headlines, I think, are naturally doing so. I'm not excusing any of the bad behavior and bad performance at Facebook. I sure would like to see things get better. And yet, my horse sense, the capital F fool in me, thinks that things are probably going to get better than people think. So we'll take our little +8 and we'll add that in the win column. And that takes us from 138 to 146. And what was the 5th and final stock we put under the tree 2 years ago? And by the way, what a 2 years it has been for these stocks. I mean, the market's been good. 16 percentage point gain over 2 years. Not bad. It's about the historical average But I'm really happy to say Netflix, stock number 5, has had a really good 2 years. This is another one. If you put this stock under the tree, for example, if you bought shares for a child instead of giving them another gadget or another hunk of plastic, I mean, I like those things too. I sure did when I was a kid. But you can also give stock. And it's not just to kids. You can give it to brothers, uncles. Now, of course, it's easier to give stocks to somebody who has a brokerage account already. But if you're thinking about somebody who hasn't started investing yet, here's what you can do. You can give them money. Just give them cold cash, and they can then open an account and buy stocks with your monetary gift. I think stock makes a wonderful gift because, as we're discovering this podcast, it's hard for me to think of more rewarding gifts, frankly, as I think about the hardware under many trees, than what we're describing and discussing in this podcast. So Netflix, 2 years ago, $126 a share. Today, $272. The stock is up 116%. Yep, subtracting 16, that's an even plus 100 for this fifth stock we put under the tree. You total it all up, we're at plus 246 for this group. That's right. Take these 5 stocks together, add up their percentage points by which they have beaten the market, and that's a plus 246. By the way, to finish out the math, the average gain of these 5 companies was plus 65% against the stock market that over the last 2 years was up 16%. So 49 percentage points per stock ahead of the market averages for one of my better 5 stock samplers. This is one of those rare ones where I got all 5 of them right so far, but I do want to put an asterisk. I don't want to gloat or celebrate here. This is only 2 years later. If 2019 is a bad year, maybe these stocks decline further. We'll see whether you wanted them under the tree in retrospect. But right now, I'm going to predict you were really happy to either give or receive these stocks. And remember, the greatest gift is the gift of giving. So I hope you'll think about giving some of your favorite companies, some of your favorite stocks. If you're a stock market investor, so many of you are. Think about giving a stock to somebody else.